Hi, this is Dustin with Dustin's Dollars. Today I'm going to be giving an update on Bed Bath Beyond about the squeeze potential and a little bit on the fundamentals of the company. This is because I've gotten a couple comments asking me to give an update on this since I have given my opinion and shown some data about it on the past. So that is what I'm going to be talking about today. Before I begin, let me remind you that I'm not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I currently hold a very small position in Bed Bath & Beyond, and I am likely going to be exiting that soon, if that doesn't give you the foreshadowing here. So this video should be for your entertainment purposes only, because I could be wrong about everything I say in this video. You need to do your own research before making any investment decisions. So if you just want the bottom line and the TLDR, yes, it does look like the squeeze potential is gone for now. At this point, it looks like you have to decide for yourself if you really think this is a, classic value slash, Warren Buffett cigar butt stock, or if this is something you just want to totally get out of if you're in it right now. And so, this is the chart. Of course, the price has gone down. Sentiment is pretty awful on the company. It's back near, not quite to the lows, but back, much closer to the lows as it has been over the past year, before the massive run up that we saw. And the question here, again, is I don't really make my decisions solely based off of the stock price, right? The stock price goes up, stock price goes down. That does not necessarily reflect the fundamentals of the company, or in this case, even the sort of the technicals, meaning the short squeeze potential and those sorts of issues, those sorts of aspects, I should say. So I wanted to go through that today. But talking about let's talk through the squeeze potential, because that that's pretty quick to go through. And the one thing that we do know is that we do know, just start with this up front. I don't know why it closed. There we go, it loaded. Is the short interest remains, right? So this is at least the absolutely necessary ingredient you would need for a short squeeze. However, there are many more things that need to fall in line, that need to happen for that. And so despite the fact that there is still significant short interest in the stock, a lot of share, if you look here, you can see the current estimate, this is as of end of day Friday, was 29.5 million shares in terms of short interest. However, all the other indicators are way down. Social media sentiment, basically went flat. And this was in September, beginning of September, folks were more and more interested in the stock. Again, this is a metric I've used in the past. This is the Bed Bath & Beyond stock subreddit, membership. And you can see that it was growing like a weed, growing crazily. And then it just went not flat. There was still some, slow growth over the course of September, but not a whole lot, right? Certainly doesn't look like there's, growing interest in the stock. If you look at this scan sort of Reddit as a whole and counts up the volume of mentions of different stocks, you can see Bed Bath & Beyond is down here, number, what is that, 6 on the list. And, it is trending downwards on this, right? Meaning it is even losing interest over time. And, so it's reasonable to expect this is going to go down even further. So social media sentiment is low. The short borrow rate has been, steadily going down. It's not yet back at the, 1%, meaning that, or at least my interpretation of this is that there is still a lot of interest in shorting the stock, and there is still, fairly low liquidity for that. However, recently you've seen, there's consistently 1 million shares per day available to short on the IEX exchange. That's where this data is sourced from. And, that's not as illiquid as we saw for quite a while, for months at a time, or weeks at least, where there were, tens of thousands or 100,000 shares, right? Well, a very, very small fraction, right? 1 million shares is kind of like at least enough to say, well, there's 1 million shares available right now, and more could be located potentially if there were such a short position that was taken at that point. So that is what we see here. You combine that with what I think is the absolute biggest loss of a catalyst, and this is where we're going to shift into fundamentals. a little bit here. Let me go up here. The underpinning of, I think, a lot of the uh, short squeeze theories, at least mine for sure, was that there was going to be a spin-off or something with Bye Bye Baby that was going to be the fundamental catalyst that really pushed the stock up, that then was ignited the whole rocket fuel, whatever you want to call it, and sort of set off the situation, right? Set off the actual interest, and was a big fundamental catalyst for the company. However, I think that is completely out of the question, right? As the company decided not to spin off Bye Bye Baby or do anything along those lines, right? They just said, well, we think it's going to be best if we keep Bye Bye Baby for ourselves, and maybe in the long term that will turn out to be true, but that certainly isn't helping them in the short term. There was no big liquidity event, and now when we see their actual second quarter results, and we see, I'm looking at this right here, Bye Bye Baby comparable sales decline in the high teens, right? And that is compared to high teens growth last year. And again, this is why this was a big piece of the big fundamental piece of any potential squeeze, either short squeeze or gamma squeeze catalyst thesis, I should say, this being the catalyst for that thesis to actually happen, was this was growing high teens, which was sort of the opposite of Bed Bath and Beyond overall, that was shrinking. And the spin-off there, being able to be valued as a growth company could have been a huge boon. Whereas now that we see Bye Bye Baby is declining as well, that thesis is thrown out the window, right? And so whatever potential valuation you might have thought that the company could have had on Bye Bye Baby in a spinoff, I think is gone at this point, to see that it is also declining. And they say that it held market share relative to mass market retailers. And I think if it's only holding market share, it's not growing, and that's really not particularly attractive as a standalone company. So that is, I think, completely off the table at this point. And then we also saw that the company was issuing shares, and I think they even called out here, they had their at the money offering recently launched with approximately 3 million shares sold for proceeds of approximately $30 million. And this is another thing that's completely killing the potential for a short squeeze. They're adding liquidity into the stock by diluting, and selling more shares, making more shares available. And so that also is just going to totally kill the low liquidity aspect that has to be present for a short squeeze or even a gamma squeeze to happen, right? People have to be fighting over buying those shares. And when the company itself is issuing shares, they're issuing them at $10 per share, as they're saying here, right? Roughly 3 million shares sold for about 30 million. You do the math, that's $10 per share. There's not going to be a squeeze anytime soon, right? And I think the company it's not on this particular slide, but they have another 9 million shares available under their current at the money offering that's already been filed. And so that's a lot of additional liquidity that would kill any potential upward momentum on the stock. So I think, all of that data I take to, I put together and say, look, there's effectively no, in the short term, there's really no potential for a short squeeze to happen, or at least there's nothing that I'm seeing here, right? The only thing that remains is that there is substantial short interest outstanding, and that's just not enough to form a thesis, right? That doesn't mean anything from that perspective. A couple of things I did want to call out with the fundamentals. Overall, this quarter was horrible. They are cutting costs, which is good. Let me find the right slide. I think it's this one here where they're saying, hey, we think we're going to, cut costs enough to be approximately, $500 million annualized in lower costs there for SG&A. They intend to spend less on CapEx, and, that could be good or could be bad. It's hard to say. It really depends on whether they are getting a good return with that CapEx or not, but it certainly doesn't speak to any kind of potential growth, right? They were talking a lot about their transformation that they were going to be able to do, and to grow the business in the long term and improve profit margins. And that doesn't particularly sound positive. It sounds, it's good in the short term that they're going to conserve cash, but it's not really, considering the company is already in a state where they're unprofitable and they need to do something to improve the company. This may not actually be enough, right? Cost cutting on your CapEx on the places where you were trying to improve the company might be the wrong thing to do. It's hard to say, but they may just be in a hole that they can't get out of at this point. And then their forecast here, they forecasted break even by the end of their fiscal year, and specifically that was for Q4. And that sounds good at first. Like, you can make a narrative, you can rationalize that and say, well, if they're improving things and they're break even by Q4, and then maybe they're profitable, free cash flow positive after that point, in Q1 and such of next year. But I'm a little skeptical of that, right? I mean, they certainly didn't say that. All they said was that they are projecting to be break even in Q4. And the thing that I keep in mind here, and the reason why I'm a little skeptical if that's particularly meaningful, is just that, this is a retail business, and Q4, I think I have the chart here. Q4 is almost always their strongest quarter, at least in revenue terms, right? And that gives them the most flexibility to actually, show a positive cash flow, when revenues are higher. But you can see this is the 5-year chart, and you can see these peaks here are their Q4 results, right? This is Q4 results being reported in February. And so you see February of 2018, that was a peak in the revenue. This next peak, February 2019. The next peak, February of 2020. And then, things were weird with the pandemic, so I don't really give them a whole, I think this whole year was weird, right? But you see even February 2021 doesn't necessarily look like a peak until you look at what happened after that, and you see that it just dropped like crazy. And so, the entire rest of 2021 fiscal year, there in 2021 was lower, until then this sort of slight peak at the end in Q4 for that was reported in 2022. And then, we've seen things go down from there. And so I guess my takeaway here, and the point that I'm making, is if the best that they can project is, break even cash flow in Q4, when the revenues it's going to be basically their highest reporting revenue, most likely for the whole year. That's, that doesn't sound good to me, right? Because if they're just break even in those quarters, in the following quarters when their revenues are down, doesn't seem like much of a leap to expect them to then be unprofitable, free cash flow negative in those quarters. And man, that's just not a good situation for the company. So I think the fundamentals are also not good and not improving if the best they can do is break even in Q4. Like, there's just no positive outlook at this point. So we'll see. I'm not saying that the company won't be able to turn things around, but nothing that I'm seeing as of right now looks very positive for the future for Bed Bath Beyond. So that is all of my thoughts, and that's why I actually think the stock is, the company's not in a great place, and it's just not really very attractive to hold right now. And I'm probably gonna sell out of my shares, if we see any sort of a spike up. Honestly, I have such a small position that it's not, I'm not stressing over it too much. Hasn't been at the top of my list of things to worry about, but I have some sell limit orders in. If they happen to hit, I'll be happy. If not, I'll take my losses in the end. It's not material for me. So, all right, that was everything I wanted to cover today. Hopefully, if this is a topic, I know a lot of my viewers don't care about this, but if you were interested in Bed Bath Beyond, hopefully that, answered what you were looking for. And if you have any additional questions or comments, feel free to, ask them in the comment section below. I will be happy to do my best to help you out. Thank you very much, and have a good one.